All right, let's stick with this reporting season thematic for our stock of the day, which is Life360. It reported today, and its share price here hit a record high in the wake of those results. Revenue rose 36% to $115.38. The June quarter earnings beat of $20 million was 50% above consensus, with advertising revenue a likely driver of the beat. Lower operating costs and higher than expected hardware earnings were also a positive. Life360 has lifted its full year guidance. And you saw that man on screen just a short time ago. Life360 co-founder Chris Hulls is stepping down after nearly 2 decades in the position to move to become executive chair. Lauren Antonoff will take on the CEO position. Jefferies analysts say the timing of the CEO switch was well flagged, but did come sooner than anticipated. Hulls says the succession plan has been in place for 2 years, saying of his own tenure that, it's become a platform trusted by millions around the world. He couldn't have imagined how far Life360 would come or how many families we'd impact. So those shares today, the best performers on the 200 by percentage change, up by 8.5%. So let's get a view on Life360 from Scott Phillips from the Motley Fool. So this has beat expectations, and market participants willing to send those shares higher. Is it justified in your view?
Oh, the last one's a hard question. Really great, astonishing results. Revenue up through the roof, just doing a really, really great job. It's funny, the services we use, we tend to talk about a lot more, the Facebooks, the Instagrams, the WhatsApps, the others. Life360, a bit of a niche-ish kind of market. I mean, pretty big, you think about the number of families around the world, particularly in the Western world. But you don't always necessarily use it or come across it regularly, and that kind of meant it flew under the radar for a long time. Not any time recently, though. You see that share price move has been phenomenal. 162 times earnings, by the way, though, if you don't mind, a $6.5 billion valuation, Australian dollars at least. This is a really tough one, Nadine. If you're a true believer, if you really can compound for years at this sort of rate, then the PE need not scare you. When you're already a $6.5 billion valuation, what is a relatively niche-ish kind of market, people age out of the use of this product over time. The kids get older, frankly. So it's not necessarily got the stickiness or the long-term customer value that maybe some of the bigger platforms have got. It's much smaller, though, so plenty of upside. I can't bring myself to buy it at 160 times earnings. I have to say, look, if you've been on that ride, you've done very, very nicely. I can imagine people saying, you know what, I'm here for the long term. I'm going to stay the course. Again, those numbers are. I'd be a straight out sell, except those numbers have been really impressive. The growth there, they're doing something very, very right. The shareholders are being well and truly rewarded for it, another 8.5% today. So I'm going to take the sheep option and go with a hold. I definitely wouldn't buy. If I held, though, I wouldn't be selling. You probably made some nice money on the way through. Worth giving management a bit more rope and seeing what they can come up with.
Thank you, Scott. So, Phil, I was speaking with one of your colleagues, Adam Dawes, about these scenarios. Scenario 1, it would disappoint, maybe a buying opportunity. That did not happen. Come in line. But it's actually a beat. And so we've seen the share price lift. Yeah. Is it just getting a little exy for you?
Look, it probably would have lifted more without the CEO change.
Okay,
we saw a great result from JB Hi-Fi yesterday with a solid start to 2026, but you had the MD change. So the last 2 days been flat. I suspect this stock would have been higher if it wasn't for the MD change because of the extra uncertainty. But their phrase on mine, the anxiety economy. They're exposed to the anxiety economy, which is getting bigger, not smaller. Their total addressable market is probably growing. I accept Scott's point that you grow out of this product, but those kids then go and have kids. So even though they're probably not having 2.2, they're probably having 2.1 or 2.
And they're also trying to move into sort of aged care stuff as well.
So there's and then pets. There's still the total addressable market is growing. It is not a cheap stock. It was not a cheap stock yesterday. It really smashed consensus. It's above the top end of the range, and they put out an upgrade. History tells you you hang on to winners when they upgrade. There'll be consensus upgrades overnight. All the momentum investors will keep buying this potentially for the next few days. I dare say it. It's probably a good bottom draw stock. It doesn't look cheap. It's never going to look cheap. But if you've hung on for this, you've probably got a few good years left of growth. Analysts will upgrade, but perhaps they can beat again. So again, apologies for the hold rating, but I'll call this a genuine hold. Don't sell your winners today. I would hang on this one for at least a little while longer. It's a hold. I can't buy it though, but it's a hold.
Yeah, okay. So a genuine hold. There you go. Said with conviction. That was the stock of the day.